Hello everybody, welcome to that market report. My name is Christian Charlo. Today we're Thursday, May 23rd. Today folks, I want to bring to your attention to the gold and the silver, because what we found is that there's a bullish divergence on the gold and on the silver, and we think that we're due for potential rebound. So let's take a look here at the bullish divergence that we have here on the gold spot price. So this is GLD that tracks the gold spot price. It's the 12.26.9 MACD. So you see here why it's a bullish divergence, because this bottom here went really low on the histogram, and right now on this bottom, which is at the same level at this, we're actually a little bit higher. So that shows us that the wave of sellers that bring the gold spot price until that support is actually getting lower and lower. So that's a sign that we might have a rebound. So the strategy is, if you actually acquire some position on the gold, we expect to have a first pause around the 20 moving average, so around 137.12 on GLD, and the next stop will be on the closing of that gap here, so around 143.24. So what is the strategy that you should do? There are actually two strategies that we actually recommend. It's either you put your trailing stop, so let's say that you acquire some positions right now, you put a trailing stop, let's say at 4%. So if ever your position lose 4%, the gold lose 4% or more, you actually you will sell automatically your position. Or you could just actually start to acquire some positions and actually play the support. So if ever you acquire some positions and you have here that the gold breaks that first support, you get rid of it. Or if you're willing to tolerate until that other support, you get rid of it. Or if you're willing to tolerate until that other important support, which is that area here, you will get rid of it. So you could either put a trailing stop or trade the gold and put a stop loss at this support, or at that support, depending on your risk tolerance. And to trade the gold, to benefit from an increase that we expect in the gold, because we see the bullish divergence, is HDU on the TSX, UGLD on New York, and UGL also on New York. So I think UGL is 3 times and UGLD is 2 times, or exactly 3 times. So for the silver, same thing, same bullish divergence, because you see here, this is a bottom and the stochastics where the histogram was lower, and now we have the bottom almost at the same level and it's slightly higher. So that shows us that there's a wave of buyers who are getting in. So we expect, if you get in on the silver here, what's really to expect, you have to watch, because SLV tracks the real silver spot price, and the threshold is at 22 bucks. At 22 bucks in the real silver, we actually have an important support. So if you get in here, there's no problem. You just have to put same strategy as the gold. You could either put your stop loss whenever you see we break that support here, or until we break that support at 21.50 on SLV. So this is a strategy you could do. And to day trade the silver, you have USLV and you have AGQ and you have also HZU on the TSX, which allows you to do that. So this is what you can do. Silver, gold, we expect a rebound. You can day trade it with the ETF. I've shown you a list here of a couple of ETF. On the gold here, you have all those ETF that are there here. There's all the one for the gold. Those are all the one for the silver. But what's important is that you either put a trailing stop, so which means that if ever the gold or the silver lose a certain amount of a certain percentages that you feel okay with, your position is going to be eliminated or sold, or you trade until they break the support, and you determine the support that you would like, that you feel comfortable with, to actually tolerate your long position. So this is it. See you next week for our market report.